Basically, after Connecticut received that approval that state and local income taxes for the owner of a business can be deducted at the business level, 36 states and one city, which is New York City, then decided that they were going to follow suit and take advantage of this as well. So every single person in here, I think only a handful of people said they were operating as a sole proprietorship, PLLC entity. You should be taking advantage of this if you live in one of those 36 states. So if this is the first time you ever heard of it, definitely want to talk to your accountant tomorrow. Well, tomorrow's Sunday. You could give them a break. Monday, and talk to them about the fact that you should be you want to take advantage of this before the end of the year. Now, the One Big Beautiful Bill Act, that again got passed July 4th, 2025, that increased that $10,000 cap up to $40,000, which is great. Definitely provides a much larger deduction now at the federal level, but it still makes more sense to implement this pass-through entity tax program for your practice because the deduction there is going to be much greater doing it that way. The other big thing with the One Big Beautiful Bill Act increasing that $10,000 cap to $40,000, there is income phase-out limitations. So if you're a dentist making over $500,000 a year, you're not going to get that full $40,000 tax break. If your income exceeds $600,000, now you're only going to get that same $10,000 that the law always was. So for a dentist, definitely, in my opinion, still makes sense to take advantage of that pass-through entity tax program. Now, in addition to that, the One Big Beautiful Bill Act, the original proposal, before it went from the House to the Senate, there was a provision in there that, if you remember, I was talking about specified service trade or businesses not getting that 20% tax break on your business profit. The original provision of this bill was also set to include that those same people, which is all of us in this room, can't take advantage of the pass-through entity tax program either, which would have tremendously hurt all dentists, accountants, small business owners that fit in that category. The great news is the American Dental Association, American Institute of Certified Public Accountants, they went nuts over this and demanded that it get stripped out of the bill. And at the very last minute, I think July 2nd or 3rd, they pulled that out of there. So the great news is we all still could take advantage of this pass-through entity tax program. All right, so that is pretty much that there. Perfect. So again, covered this already, but the way the pass-through entity tax program works, you could pay the entity level state income tax that you would normally owe personally at the entity level. Again, this only applies to partnerships and S corporations. If you're a single member PLLC filing your business revenue and expenses on your personal tax return, or if you're a C corporation, you cannot take advantage of this tax deduction. So anyone that's an S corp, anyone that's a partnership, you definitely want to take advantage of it. And again, the way that works is your entity is paying the tax. They're going to take a deduction on the corporate or partnership tax return for paying that tax. Again, using that as an example, your profit was $1 million. You paid $100,000 pass-through entity tax. Your profit's now $900,000. You're going to pay tax on that. But then at the state level, you're going to get a tax credit dollar for dollar for what you paid into that program. So really is a very powerful tax deduction. In my opinion, it's probably the most overlooked, but greatest advantage tax deduction that you could implement within your dental practice. All right, and for this reason, again, same thing with the 20% tax break that I mentioned earlier. As an S corporation, you have to pay yourself a W-2 salary, right? So that salary has to be considered reasonable for the work that you're providing to your practice. So treating yourself as an S corporation, you do not get that same pass-through entity tax deduction on the wages you paid yourself. So if you're operating a dental practice with more than one owner, again, depends upon what state you live in, but a PLLC definitely could be the route to go there. I'm sorry, PLLC partnership could definitely be the route to go there. All right, just want to check how I'm doing time-wise. Good. Okay. Perfect. All right, so again, already covered this, I think, in detail, so that looks fine. Here's a list of the states that do allow for a pass-through entity tax program. Almost all in the tri-state area. Depending upon where you're from, you're probably going to be able to take advantage of this. Now, you want to make sure you're making this election because a lot of states have deadlines. For New York, for example, you have to make this election by March 15th of the year in which you would like to be registered for the program. So that's definitely something, if you haven't done it for this year and you live in New York, it's too late, but you want to make sure you're doing it by March 15, 2026, if you want to take advantage of this for the 2026 tax year. All right, so you want to make sure that if you do register for this pass-through entity tax program, that your partnership or S-Corp is taking that deduction, paying that tax in full before December 31st. And again, a lot of these states have had this law available since 2021, a lot of them in 22, a lot of them in 23. But again, if you're working with an accountant that may not be up to date and familiar with all the new tax law changes throughout the country and within your state, you may not be taking full advantage of this. All right, so again, have to make that election by March 15th of each year. It's fully deductible at the entity level, and you get the state tax credit, so that's all perfect there.